Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 21st. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that comes in to impact the markets with some of my market analysis. And I'm going to do the same thing for you folks out there, but I'm going to layer on top of it these option strategies I find based on those market analysis assumptions. What we do here, though, at Pro Trader Strategy is I'm trying to streamline your process, take the guesswork out of it, and increase your probabilities of success. The beauty in options is you don't always have to be directionally right in order to make money. And I've got proof of concept for that here today for you all. So we'll go through that, and that's why you should follow my guidelines. It's not just picking an option strategy out of a hat based on a directional assumption. We have specific guidelines to find you the right strategy. All right, so without further ado, let's get on with the economic data. Across the pond, not a whole lot to see there. We did have some governing bodies speaking across the way, like Lagarde was speaking at the ECB. But here in the United States, more importantly, we've got a mess of FOMC members speaking here. They're going to be very close to having that lockup period where they can't talk about economic outlooks ahead of the FOMC, and that's like right in line where we are because we have the beige book. That's one of your biggest indicators that we're going to stop hearing these Fed governors really talk about Fed policy and just kind of be talking heads for the most part. With that being said, beige book is later on today, so keep your eyes out for that. Though we did get crude oil inventories coming in about 1.5 million barrels below expectation, that being they came in at a drawdown of 1 million barrels and expected to be a build slightly of 500,000 barrels. Now, that we're seeing here reflected in the market, probably not. We're seeing crude oil come off by about $1.50. I don't think that number is enough to really affect the price of crude oil at this point. Something to note, though, if you're flying a jet, then your prices for jet fuel are astronomically low right now because of the supply build of all of these airlines not flying. All right, so just a little note with the crude oil inventories there. That's about it for the economic data. Keep your eyes out for some of the Fed governors. It's their last chance to really talk about Fed policy, I think. So gold futures moving higher again today. Hey, we got back above that 1923 area that we talked so much about. I think this is more so because it seems like that stimulus package is a little bit more of a reality than being pushed off past the November elections. I think that we're going to probably see something come down the pike relatively soon. So gold futures moving a little bit higher today. Bonds pretty much unchanged. A little bit lower on the day after earlier today, seeing some weakness. But now that was on a bounce in equities. Seeing the equities start to show a little bit of chinks in the armor there. But making a little bit of a bottom, we are seeing lower lows and lower highs here, which is a very indicative trait of a bearish market here. Maybe we'll get a bounce and go down and really test that 172 handle. But I'm under the assumption we're getting a stimulus package. The Fed is going to support these rates. They're going to try and suppress them in a sense, actually. Flip side of it, try and suppress these rates. That means they're going to be propping up the interest rate or the bond prices and the 10-year prices and things of that nature. All right, VIX pretty much unchanged, maybe slightly negative on the day, and we have the Dow Jones Industrial Average positive, but you can see, still looking pretty weak. Yesterday it looked like we tried to hammer out a bottom here, but still not out of the woods here yet on testing the point of control and really moving down to that 27 600 area, which is another 500 points below where we are. NASDAQ, bit of a pause here again as well. Like we said before, trying to hammer out a bottom here and maybe get a little bit of a recovery happening. That will happen if we get word that there is a stimulus package out there. We can see that all of these companies with these earnings have done very well, and it's mostly probably due to some of the stimulus that we've been getting. That being said, we've got a couple of trades that we'll talk about here in a moment. We've got the E-mini S&Ps. You can see right off the bat some strength in the overall markets. Maybe it was just to flush out the shorts and now started selling off again, consolidating, feeling like a pretty much of an inside day. Yesterday was an inside day, clearly, but what we're talking about here today is just slightly outside of that move there. IBM has broken below this little Fibonacci area and the value area low. It could signal some more downside pressure here in IBM. Now, with that being said, you guys remember for their earnings, I sold the 120 puts that are going to expire on Friday. It looks like I'm getting long IBM at 120 minus the credit I received for that. Well, I decided to do some dollar cost averaging in here. I've got another support level. I think it's just ridiculous that we're even thinking that we're going to go down and test this 23 Fibonacci there and in that 106.73 area. So I'm trying to sell some, excuse me, I'm trying to sell some puts in here again, and they are in the November contract, and I'm trying to sell the 105 puts in there for $1. I've got it at $1 even. It's trading around 94 cents, so much more of a break here. I'm going to try and get hit on these 105 puts. If I get this market to fall out of bed down to 105, that is just bizarro world to me right now, and I would be happy, more than happy, to be buying IBM, who beat on earnings at a crummy call afterwards, and that's what this is all about. So I'd be happy to buy that in and around those areas, lower my overall break even to right around what is that? Not what, about 112, 112.50-ish, probably 112 with all the credits that I would be receiving on that, maybe even a little lower now that I think about it, probably closer to 111.50. All right, so with that being said, trying to get a trade in there on that. If I get much of a more of a downside here in IBM, I'm going to be able to dollar cost average or try and lower my overall basis there. Also, with Texas Instruments, I talked about this. I was playing this, trying to sell some calls against this at an all-time high. I just really think that the more and more we're seeing these earnings come out, people, it seems like they're ahead of themselves, all right? Yes, they are beating on the streets, but they are still seeing some downside pressure here. Same with Texas Instruments. They beat on their earnings per share here that we can see, but the market kind of slapped them in the face for it. And I went in and sold the October, sold the 157.5 calls in there for 67 cents. I was able to buy those back for 6 cents this morning. That was even with, or that was especially with the market selling off. Even with is what I meant to talk about here is Netflix, you guys. Netflix, I went into the October and I sold the 475 puts in there. Now, they beat on their earnings per share. Forward guidance, not looking as rosy as they fully expected beforehand, and they missed on their subscription. As a matter of fact, it was one of their lower subscriptions, came in a lot lower. So that is the catalyst for really causing Netflix to come off, is the lack of new subscriptions there. You know, the thing we got to keep in mind here is, again, I probably would have been happy to buy this at $4.75. And if they get much more of a sell-off here, I'm going to still consider that, because I don't think people are going to be going to the movie theaters coming out of this or anytime soon in the next year or so. People are going to start producing video or and movies. Netflix is going to be one that really does well through that type of situation. I'd rather be sitting at home watching a movie on my TV, despite the, I don't love all the Netflix movies, but I'm just saying, and I'm not a huge movie goer either, so, you know, I'm a little bit biased on that aspect. But anyway, at the end of the day, big sell-off in Netflix, I'd be happy to do this. But one of the things we can see here with Netflix is a big sell-off. And with that being said, we got that big sell-off, but I talked about this yesterday. Just the theta component in there is massive heading into an expiration cycle. And we can see that we had this Netflix drop from 61 to 45 right now. So we're talking about 16 percentage points coming out of that. Well, if you watch my videos on how to trade options, this is one of the things that will help you out massively, because what we're talking about here is a trade that is got this big theta component. We know volatility is coming out. This is one of those things where I talk about, it's not just picking options out of a hat. We're trying to pick this where we are setting ourselves up for success. And the Vega component on this this trade was probably around 12 or 15 cents. Well, we got a 10%, let's just call it a 10% drop in that overall Vega component. Well, that times the 10 or the 15 cents, we're basically talking $1.50 coming out of this, even on that massive drop there. So the volatility coming out, the theta component, moving the direction against me in my face in this trade, allowed me to get out for a nice profit, especially when all things being equal was really just running against me here. And I went into the October, like I said, sold the 475 puts in there for $2.81. I was able to buy them back for 75 cents this morning. We got a little bit of a bounce if I break this down on this trade. If I want to go to a 15-minute chart real quick, let's just do this. We got a bit of a bounce here early on, despite the fact that overnight we were much lower than we are even now. Got a little bit of a bounce here off the morning trade and was able to get out of that for a nice profit, for over $2 profit. Now, that was all set up because we set ourselves up for success. Putting these strategies on, high volatility, got that ball crush coming out, allowed me to have this trade go against me and still make money, all right? That's how we do it here at Pro Trader Strategies. I'm trying to set you guys up for success. We don't always pick the right directional move. And that has been something I have clamored about my entire career. I don't care if you're finding somebody out there that's picking stocks for you and telling you, hey, this is, got a high probability of a bounce. Those things just really rarely work out. Maybe still saying maybe slightly better than 50% of the time. Well, if you can take an option strategy and layer it on top of that higher probability trade, well, your probabilities have just gone through the roof then. And that's why you need to set these strategies up according to these rules to make sure that you're turning the tables into your favor to be successful, all right? That's all I got for you guys, other than one last thing we got to go over, and that is our disclaimer here. So let's throw this out there for you guys. Make sure that you guys understand your risk before getting involved in any trade. And you need to know this, all right? It's for your own benefit. If you can't take that, take it easy.